Hello again, and welcome to episode 45 of the Ask the Doc Life Lessons podcast. Dr. V here, and I'm going to be your host. Today, we're diving into the world of exchange-traded funds, or ETFs. We will explore what they are, why they might be a valuable addition to your investment portfolio, who should consider investing in them, and how to integrate them effectively. I will also highlight some of the best performing ETFs as of January 25. Let's get started. So, what is the definition of an ETF? An exchange-traded fund, or ETF, is an investment fund that holds a collection of assets such as stocks, bonds, or commodities and trades on stock exchanges throughout the day, much like individual stocks. ETFs are designed to track performance of a specific index sector, commodity, or asset class. This structure allows investors to gain exposure to a broad range of assets with a single investment. Why bother investing in ETFs? Well, that's pretty simple. Investing in ETFs offers several distinct advantages. First, diversification. By holding a basket of securities, ETFs provide exposure to a wide array of assets, reducing the risk associated with investing in individual securities. Next is the cost effectiveness of ETFs. They typically have a lower expense ratio compared to mutual funds, making them a cost-efficient way to invest. Third, liquidity. Since ETFs trade on exchanges, they can be bought and sold throughout the trading day at market prices, thereby offering flexibility to investors. And finally, transparency. ETFs disclose their holdings regularly, allowing investors to know exactly what assets they owned. So who should consider investing in ETFs? Well, to begin with, a novice investor. A new investor. Those looking to enter the market can use ETFs to gain broad exposure without needing to pick individual stocks. If you're a lazy investor, use an ETF. Cost-conscious investors, individuals seeking low-cost investment options, may find that ETFs are appealing due to their typically lower fees. Diversification seekers, investors aiming to diversify their holdings across different sectors, geographies, or asset classes. Thereby, you can achieve this efficiency through ETFs. And active traders. Since ETFs trade like stocks, they are suitable for investors who wish to take advantage of the intraday price movements. Day traders, so to speak. Now, how do I best assimilate ETFs into my investment portfolio? Integrating ETFs requires several steps. Step number 1, define your investment goals. Determine whether you're seeking growth, income, or capital preservation. 2, assess your risk tolerance. Understand your comfort level with market fluctuations to choose ETFs that align with your risk profile. If you're risk averse, then choose risk averse type ETFs. 3, select an appropriate ETF. Choose ETFs that match your investment objectives, whether they are broad market indices, sector-specific, or commodity-based. 4, diversify holdings. Even with ETFs, ensure you are diversified across different asset classes and sectors to mitigate risk. 5, monitor their performance. Regularly review your ETF to ensure that they're continuing to align with your financial goals and make the adjustments as necessary. I look at all my portfolios every 90 days and make adjustments. Now, what are the 10 best performing ETFs as of January and February of 2025? Here they are. Number 1, SPDR S&P Oil and Gas Equipment Services, trades under the symbol XES. It focuses on U.S. energy sector, equipment, and services, and has a nice 12.9% return. 2, the Van Eck CEF Muni Income ETF, trading XMPT, offers exposure to municipal bonds, and has a 2.5% return. 3. iShares CMBS, trading under CMBS, it's targeted U.S. commercial mortgage-backed bonds. 4. United States Natural Gas Fund, trading under UNG. It tracks natural gas prices, showing strong performance due to weather issues. Number 5, Invesco Currency Shares. It's a Japanese yen trust, FXY. Take a look at that. Number 6, Microsector's Gold Miners 3X Leverage, GDXU, provides leverage exposure to gold mining with a hefty 34% return in January. 7, Granite Shares. Trades under Coin, COIN. It offers leveraged exposure to Coinbase with significant returns. 8, Vanguard S&P 500, which is a really good EFT. It tracks the S&P 500 index, which is very popular among most investors. 9, Invesco EQQQ, which provides exposure to the NASDAQ 100 index. And 10, Vanguard FTSE, which offers global equity exposure across developed and even emerging markets. Please note that past performance is not indicative of future results in this, and it is essential to conduct thorough research and consult a financial advisor, a stockbroker, before making any of these investment decisions. These are merely my opinions. Okay, what are some of the resources I should consider? For those interested in learning more about ETFs and investment strategies, consider these resources. Investopedia. It offers comprehensive articles and tutorials on ETFs and various other investment topics. The Vanguard Investor Resource provides educational materials on ETFs and portfolio construction. Financial advisors. Consulting with a certified financial planner can provide personalized guidance tailored to your specific situation. So what's the bottom line? ETFs present a versatile and efficient way to build a diversified investment portfolio. By understanding their structure, benefits, and how to integrate them into your investment strategy, you can make much more informed decisions that align with your personal financial goals. Remember to stay informed, assess your risk tolerance, and consider consulting with a financial professional to optimize your investment outcomes. Thank you for tuning in to this episode of Ask the Doc. I appreciate it. If you have any questions or topics you'd like me to cover, please send me a message. I appreciate that. And as for now, happy investing. This is Dr. V signing off.